Hello investors and traders, welcome to the Trend Trader channel. Today I just want to give you a quick tutorial on how to use the stop loss functions and other order types that are available on EasyEquities. This tutorial comes after I requested or asked EasyEquities if the stop loss function was now available. Remember, in 2021, EasyEquities started to roll out more order type functions. One of the order type that they spoke about was the stop loss function. And then during that conversation, last year, I wasn't sure whether EasyEquities has made these order types available. So last week I asked them on Twitter if they do have a stop loss function on the platform. The good news is that these order types are now available. On the South African stocks, it's not all the companies that have order types, specifically the stop loss function, but for US and Australian stocks, these order types are available. So in this video, I'm going to show you how to use these order types when you're making your own trades in your portfolio. Remember, in this channel, all the time, whenever we talk about taking positions, we always mention that we will have a stop loss. So if you are trading a JSE stock that is part of the top 100, then you can use the stop loss if that is something that you use in your trading. For us, we always use a stop loss because stop loss is our risk management tool. So we appreciate that EasyEquities has made this tool available to us, even though it's not available to all the JSE companies, but at least for the US stocks it is available, and for the Australian stocks, even though we don't trade the Australian stocks as yet. So let's go, let us look at those different order types. Okay, so there is a link. I will leave this link in the description where you can read about all the order types that are available on EasyEquities. Like I mentioned, I said that some of the order types are only available for the top 100 JSE stocks, as you can see there, as they have highlighted, and then the ETFs, and then they are all available for the USD and the Australian dollar companies there. The problem with the South African rand is that some of the stocks are not liquid. Remember, sometimes when you try to place an order on EasyEquities for some companies, you may be told that you can only buy up to a certain amount of capital, or maybe you want to buy a company. Instead of that trade going through, that trade, it tells you that it's only available as a pending order. So when you place these kinds of orders, you will be placing pending orders. It's not market orders. So just keep in mind that it's not available for all the shares, and also remember that the displayed price, it has a 15-minute delay, but if you have easy credit, you can then use your EasyCredit to request the live price of that particular asset that you're interested in. So it is something that you have to keep in mind. And then the other thing that is there, I don't see it here. Remember, the commission on EasyEquities is 0.25%, but if you place some of these order types, instead of paying 0.25%, you will actually be paying 0.35%. So make sure that you understand that thing before you place this order. And also keep in mind that whenever you are trading using I just want to get my train of thought. Okay, so whenever you are trading, you have a stop loss. The stop loss will be triggered once that price is hit. So just keep that in mind, that once that position is closed, if it is a losing position, you can lose a portion of your capital, because remember, the whole point of putting a stop loss, you want to limit the amount of money that you can lose in a position. So when you use a stop loss, expect that once it's hit, you are going to get back your capital minus whatever position that was lost there. For example, if you bought something at 100 rand and your stop loss is at 90 rand, so when that position is closed, you are only going to get back 90 rand of your capital. You are not going to get back that 10 rand. But like I said, the stop loss, it is better if it's used by people that understand how it works. It shouldn't be used by people that want to buy and hold or people that believe that you only lose money in the market when you close a position. But for people that are active traders or people that want to limit their capital loss, then the stop loss function, it is a useful function. Even though I speak a lot about the stop loss, there are other order types like a buy stop order or a limit order that I will show you how you can use them in your investing. So let's go through the different order types. Like I mentioned, that the cost of this transaction is going to be 0.35% rather than the standard 0.25 brokerage fee. And then you can only place one order of each per share, whether you have a take profit. You can place a take profit for one company, and you can still place a stop loss for that one particular share, right? So understand that. And then also, if you wish to amend your order, let's say you were buying at 100 and then the share price went to 110, now you want to adjust the stop loss from 90 to 100, then you need to cancel the 90 rand stop order. But when you try to close it, it will give you an option to amend it, then you can just change it. But you cannot have two stop losses. Let's say, for example, other people prefer to have a two take profit. They buy something at 100, they have a take profit at 110 and another take profit at 120 at half the amount of shares on each. Then you will need to amend that. And then make sure that you can also cancel that order completely, or you can update that trade ticket or that order ticket. So these are the things that you can do there. Right, so now if you go through these orders, the normal order that most investors use, if you just log in into EasyEquities account, you've already made up your mind that you want to buy ShopRite. It doesn't matter what share price ShopRite is trading at. You've already, whatever price that is available at that moment, you can just log in into your EasyEquities account, place an order, and then you will be able to buy your ShopRite shares. Then you are placing a market order. You are not picking a specific price. This works best for long-term investors because it wouldn't matter how many cents you paid extra or less from your preferred price. You just wanted to ensure that you get those ShopRite shares. So most investors, they normally go for market order, or most investors or retail traders, they always go for market order because that's just the simplest transaction. Then there are different orders there, so they allow you to select the market order, which I've just described, or the preset limit order. Here you need to have a specific price, a price that you want to get from the market, and then you tell the broker that execute my trade if and only if this specific price is hit. If the price is not hit, then that trade won't go through. I will share with you the advantages and disadvantages of using a limit order. Then the option is for a limit order when we are buying. That means that the share price has to be higher than the current share price. Let's see if we can find an example. Let's say you want to buy Sasol and you believe that Sasol can still fall back a bit. In this case, I do have a position on Sasol, but let's just say as an example, you believe that Sasol can drop all the way to 300 rand from the current share price where it is trading, right? The assumption is that you are a good trader, you know what you are doing, so you believe that Sasol is overpriced. Then you think that this level here around 300 is a good support level for Sasol. Then you expect the share price of Sasol to fall all the way to about 300. Then you will place the limit order. So your order will be triggered if the share price, or the bid, meaning that the person that is selling Sasol, remember that we have the bid and then we have the ask. Never mind my handwriting, right? So the bid is for the buyer and then the ask is for the seller. If you hold the Sasol shares and you want to sell them to somebody, then you're saying that you want to sell them if somebody is willing. In this case, let's say the share price is moving up, you are selling that, you are asking for 400. So once the ask price reaches 400, then the trade is executed. And then if you are a buyer of Sasol, and then you'll be bidding that you are willing to pay for 400 rand for those particular shares. But that is just something else, so that you understand the difference between the bid and the ask. In this case, I just want to explain the limit order. So if you place the limit order, the share price, the current share price CP is for the current share price, has to be higher than the price that you are willing to pay for those particular shares. Then in this case, you expect that Sasol is going to fall, then you put in the limit order. So the trade is only going to be executed once the price fall from 360 all the way to 300 rand per share. Then you get your trade is executed. And then if you want to have a stop order, because you want to make sure that you buy those shares at 300, but also you want to have a stop loss at 275, then you can set a buy stop order there, not a buy stop order you can set a stop loss which is going to be lower than 300, so that if the share price continue to reach 300 and then it continue to fall and not stop at 300, then at least you exit with that tiny loss of 25 rand per share. Like I said, we only use a stop loss as a risk management tool. So I hope that now you understand when do we use the limit order. Let's look at the other order type. So the other type is called the buy stop order. In this case, EasyEquities calls it the break order buying, right? So let's see how you can use the buy stop order. I'll just call it the buy stop order, not the way that EasyEquities is calling it. In this case, the share price of Sasol is trading at 360 rand per share. Then you, for whatsoever reason, you expect that Sasol should be trading above 400 rand per share, but now you don't want to buy at 360. You want a confirmation that, okay, once the share price is above 401 rand, that means that your uptrend is going to be confirmed. So now you have a buy stop order at 401 rand. So now what you are looking for an ask. Your trade is only going to be executed if there is an ask price that is greater than 401 rand. In this case, that means that the share price has to reach 401 rand. It has to go up. Then once it reaches 401 rand, then your trade is going to be executed as well. And then for risk management purposes, depending on the risk approach that you are using, you can set your stop loss, maybe say at 38. Again, you will use a stop loss because the game plan that you are playing is that you anticipate that once Sasol reaches 401 rand, it will continue to trade high. So you want to limit your loss in case Sasol comes back and start trading at that range. So those are the two order types that I normally use in my trading. Just to touch briefly the order types that I mostly use, I'm just going to move the chart here. So the two order types that I use, it's a buy stop order. I will just give a abbreviation BSO. So it's a buy stop order, meaning that here we have the current share price. So the current share price is here, then the buy stop order is going to be above. But if you expect the share price to go lower, then you put in a limit order. Then you expect the share price to go lower. So I hope that this summary tries to clarify it a bit. The buy stop order, the price that you want has to be above the current share price, and then for the limit order has to be lower than the current price. Then that's it that you have to remember with the buy stop order and then the limit order. Then whenever you want to put in a stop loss, so you are buying at the current price. So this is your entry here. Like I said, don't judge my handwriting. This is your entry there. It doesn't matter what is the price, but you want to limit the risk that you are taking on that particular position. So for the stop loss has to be below your entry price, because you cannot have a stop loss that is greater than the entry price. So now you have your stop loss. It doesn't matter how low or how wide it is from your entry level. And then since you expect the share price to go up and then you don't want to give back your profit, then you're going to have a take profit. The take profit is going to be higher than your entry price. Again, you can set the take profit by using a limit order, the way that EasyEquities has explained it. Let's see if it's still there. If you go to the order type, you see when you go to take profit, they say that you can set a take profit by using a limit order, meaning that the share price has to be higher than the current price. And then when you are setting the stop loss order is that the share price will be sold once the bid is reached or below that, and then you need to ensure that the current share price is higher than, the limit order price is lower than the current share price. Again, I will leave a link to all this information, then you can see, you can read on your own what does it mean. Okay, so now let's go back just to quickly touch at when I will use this, because I don't always use this order type, but it depends on what I'm trading and what it is that I'm trading and the goal of that particular trade. So sometimes I trade a breakout. So if the share price is trading lower and I expect the share price to move up, then we have the current share price. Maybe the share price is trading in a range. Then I expect that the share price is going to break above the range. Then I will put a buy stop order just above this range, so that once the share price closes above this range, then my trade is triggered. Then in this case, I will use the buy stop order, right? Then with the buy stop order, I always have a stop loss. Then I will have my stop loss just somewhere below the resistance level. Otherwise, other people, they trade what is called a support and resistance. So we find that the price is trading in a range. Let's say it's an 8 rand range, and then it's trading between 8 rand and 100 rand. So it's a 20 rand range. You see that the price, it goes up. When it goes up, it finds resistance, then it bounces down to the support level, and then it finds support, then it bounces up there, again meeting the resistance. Then now the next thing that you're anticipating is that the share price is going to bounce back and come as close as possible to about this 8 rand. Then you can put in a limit order, so that once the share price reaches maybe 82 rand, then your trade is triggered, because you anticipate that once your trade is triggered, when the share price it comes back to 82, it will open a position for you, and then you expect the share price to go back to 100 rand. So when we trade this, we normally call that swing trading. When you hear me talk about swing trading, this is what I'm referring to. I'm just buying at a certain level and expecting the share price to bounce at a certain level. So in this case of a swing trade, I will set my stop, my take profit here. Then I will have my limit order here at 82. Then I will have my stop loss, maybe let's say at 70. Yeah, my handwriting is terrible. It's not easy to just write here. So I will have my stop loss somewhere, maybe let's say 78. Then I can clearly define my trade. In this case, if I bought at 82, it means that I'm risking 4 rand per share. Then going all the way to 100, the risk to reward is greater than 1:5. That is how I will normally trade using these functions that are found on EasyEquities. Again, not everyone can use these functions because our trading approaches are different. Some people, they just want to buy companies and hold them forever. Some people, they just want to take an advantage of that current share price movement. So just to show you where I've been using these order types as an example, recently I've opened a buy stop order on Glencore. So the trade hasn't been triggered on Glencore yet, but as you can see, the share price is trading in the range there, so it's inside that box. What I want to see Glencore closing above 101 rand. Once Glencore is above 101 rand, then my long position is going to be triggered. But like I said, it's not guaranteed that once the trade is above 101 rand, it's going to continue to move up. Then I can have my stop loss somewhere around 95 and 96 rand. That is where I will put in my stop loss, in anticipating that the share price is going to go up. So that is one example where I will use a breakout order. I forgot what EasyEquities calls it, but it's a breakout order for me. And then recently I've took a position on F.I.R.E. So the position on F.I.R.E, it's a swing trade. As you can see, I was just targeting a specific price. In this case, I didn't put a limit buy order because I just saw that F.I.R.E was going up. So the way that I'm trading this position. It was at that time, it was trading somewhere around 53 US dollars. So now I expect Pfizer to come back and test this level. But if you see here, there we have this low here. So I have my stop loss at this low, and then I have my take profit somewhere around 62, and then I entered somewhere at around 53-54. So the way that I will handle this position on the EasyEquities platform, but I took this trade on eToro. eToro also has the stop loss functions. I only use my EasyEquities USD account to trade ETFs. I don't use it to trade individual stocks. That's because the balance there is not that high. Remember, I made a video to say that if you don't have a lot of money, there is no need to try and diversify the little amount of money that you have. You can just simply buy an ETF while you are building the value of that portfolio. But on eToro, I have a reasonable balance. That is why I'm taking these individual companies on eToro. So in this case, I have my entry there, then I have my take profit. So in this case, it means that I have a limit order, but a limit order that is above here, where I have the intention of selling at a higher price, like EasyEquities explain it. It's a take profit or limit order. So I want the bid to be above that a particular price. They make an example to say that to buy the share at 950 and then you want to take the profit at 1050. The share now is trading at 1025. Then you are able to set that limit order at 1050, so that once the price is above 1050, then it closes that position, you make that profit. But then again, remember, whenever you trade shares, do think about tax, because you are going to pay tax on the gains that you will be making if you are profitable. Well, if you are not profitable, there's no need for you to worry about paying tax. So you see, these functions are useful depending on what you are planning, so, or on how you are trading. So in this case, I'm expecting that the share price of Pfizer is going to continue to trade higher and reach this level of 62. It is a swing trade. I'm not saying that after 62 Pfizer cannot go up, but at the same time, I'm not saying that the share price of Pfizer cannot go lower. What I've done with the stop loss is that if Pfizer drops below 49.98, then I exit that trade, because I don't want Pfizer to go down with me, maybe to say to go to about 44, 45 there. I just want to ensure that I limit my losses. So I hope that in today's video, I've showed you how you can place this. Let's see if I'm still logged in on EasyEquities, because I was just I wanted to illustrate this using the EasyEquities platform. So now I'm in the USD account, as you can see. So if you go to the account overview, you will see that I don't know, okay, they've probably kicked me out by now. Okay, it seems like I'm still in there. Let's see if I have pending orders. You see, I have pending orders there. I have a stop loss on Remgro. I have a position on Remgro. So the position is going to trigger the stop loss once the price of Remgro reaches 141. So let's see why I have this stop loss there on Remgro. Okay, so I have a position. Let me see if I can get the position to show. So yes, as you can see, I have a position on Remgro. I bought that position somewhere around 145. The stop loss initially was 137, and then I'm targeting this. I think this is about 160. There, it's another swing trade, but I also have a long-term position on Remgro. So now what I'm telling EasyEquities is that once the share price starts to trade below 141, then they can close my position there. That is what I have in there. Let's see if we can still go back there. Yeah, so that's what I have there, that stop loss sell. Remember, Remgro is a big company, it's part of the top 100. That is why I'm able to set the stop loss. And then the expire, I always leave it on good until cancelled, because if it's there for a day, once the day passes, then EasyEquities is going to cancel that order. So I want this order to stay there in that position, that it is open until it is triggered. So it's only going to be triggered once the share price of Remgro trades below 141. The current share price of Remgro is 149. Then I have a take profit on Sasol. Not that I believe that Sasol will go to 575. I was just showing someone how to put the take profit on Sasol. Sasol is another big company. That is why this is available there. Remember, you put this in the pending order. You don't put it when you just want to buy and sell. Those are market orders. They will be executed right away. But if you want to put in a pending order, then that is when you are going to have this. You see, they are under pending orders. And then I made an example that I have a buy stop order at Glencore. So my buy stop order is going to be triggered once the share price of Glencore, of Glencore reaches 102. Again, it's a good till cancelled order, because now I don't know when. Now the Glencore is currently trading at 99.65, so I don't know how long it will take Glencore to reach 102. But once it reaches 102, I want that trade to be triggered. Once the trade has been triggered on Remgro, then this order will be removed, because it will have been executed. Then I will come back to set the stop loss order on Glencore. So that is how I normally use this different buy order function. Okay, so I hope that in today's video I was able to show you how you can use the different order types on EasyEquities. One thing that you have to keep in mind is that there's a premium. Remember, the brokerage fee is 0.25 for normal orders, but for these orders there is a premium of 0.1%, meaning that instead of paying 0.25, you will be paying 0.35. And another thing, if you use a limit order, I said that I would mention the advantage and disadvantage. The advantage of using a limit order, especially if you expect the share price to drop a bit, is that you can buy those shares at a lower price. But the disadvantage is that if that lower price is not reached and the share price continue to go up, you can miss an opportunity for buying those shares, because your trade is never going to be triggered, and then the share price can just continue to go up, and then you miss that right on that particular share. So that is something that you have to keep in mind. And then the advantage of using a stop loss is that, remember, when we're trading at the stock market, we don't know for sure whether our positions are going to work or they are not going to work. So we want to make sure that we limit our losses for the positions that do not work. But keep in mind that once your stop loss is triggered, you will lose a portion of your capital. It's more like an insurance. You pay a car insurance. You're hoping that one day, if you have an accident, then you won't be liable to pay for whatever that needs to be paid. But if that accident doesn't happen, you're just gonna keep on paying those premiums. So that is how a stop loss works. You will lose a bit of your capital. You are just protecting the most of your capital, and you are willing to let go a portion of that capital. And again, if you're an active trader, the fees, they do pile up. It doesn't matter which broker you are using, as much as EasyEquities seem to be cheap at 0.25. If you trade actively, the fees will start to pile up. If you are consistently profitable, of which is something that you wish everyone can achieve, to be a consistently profitable trade. So every time you make a profit, remember that you're going to pay tax on those capital gain. EasyEquities always give us the tax certificate. Then you need to consolidate those and file them when you do your tax returns. So do keep in mind that tax is always going to be there. You're not going to ignore it or avoid it. Yes, that's the word that I'm looking for. You're not going to be able to avoid tax. So that's it for today. If you enjoyed this video tutorial, please click the like button. If you haven't subscribed to this channel, please consider subscribing. If you have any topic that you would like us to cover, whether it's something that needs to be done on EasyEquities or eToro, you can just leave in the comment section. We will try to give information on that, especially if you are familiar with the platform that we are using. That's it for today. I will see you on the next video.